Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And if you are new to the channel, on this channel we cover dividend growth investing. This particular video will be the 4 stocks I'm looking to buy in November, 4 stocks to buy maybe, or should you be adding them to your watch list or avoiding them altogether? And if you are a dividend growth investor and you have not done so already, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share videos like this every month. Whenever we enter a new month, as we have, I'll cover the stocks I'm looking to buy for the month. I also do a stock pick of the day series Monday through Thursday, where I look at a stock that's pulled back on the day to see if there's any potential value there. I do another monthly video on the dividends that I was paid out, and a weekly video every Sunday morning, a full portfolio reveal, everything I bought for the week, any dividends I've received, any options I've been involved in. So again, if you're interested in that kind of content, hit the subscribe button, hit that notification bell, and drop a comment down below. Let me know what you are buying for this month. Today, we are going to look at Realty Income, Havy Furniture, Cisco, and Nutrien Solutions. These are the 4 that I am really going to focus on in the month of November, and maybe you should too. Let's see. So this is the Vested Interest Stock Screener. This is how I set up my stock pick of the day videos. So understand the business, growing free cash flow the last 5 years expected in the future, growing dividend. I'm looking for dividend with a payout, or companies with a payout ratio of 75% or less. That doesn't apply to REITs or BDCs. I check the valuation based on dividend yield theory. We'll see that in this video. I look to buy if it's whenever a company is within 15% of its 52-week low or lower, or setting a new 52-week low. I also like to look at return on invested capital and return on equity. I like them equal to or greater than their industry average, or 10% plus. I really focus on the 10% plus. And earnings per share growth equal to or greater than the industry average, or 5% plus. And for financial companies, I throw in price to book. Price to book is a good one for companies like banks. 1 being fair value, anything under 1 being undervalued, anything over 1 being overvalued. Must meet 5 of 8 to make it in the investable pile. If it's a financial company, it must meet 6 of 9. The price to book applies there. You can use price to book in any company, but you really want to, for banks, using a 1 price to book really is good, but other companies maybe look at other companies in the same industry and compare them. Well, let's jump into the video and take a look at those 4 stocks I'm looking to buy this month. First up, we will start with Cisco Corporation, ticker SYY. Cisco is in the consumer staple sector. And all of these prices will be as of the close of business on Thursday evening. That is when I am doing this video. $65.65. 52-week range as low as $62.24, as high as $87.21. So it is closer to its 52-week low than its 52-week high. I'll buy this one all the way up to $70, but I'm hoping that it stays back down. Looks like it's up a little bit in the after hours even. So I want it to stay down $64, $65 per share, but even lower. I'd love it down here in $62 per share, but it's really starting to bounce back. The whole market is starting to bounce back. They estimate it's near fair value right here, maybe 3% overvalued really if you're looking at it. They also see, this is more for traders, I don't really pay attention to it much, but they see everything rebounding in the short term, midterm, and long term, maybe going back down. Market cap of $33.112 billion, a beta of 1.13, more volatile than the overall market, and you can see that. I'm hopefully going to use that volatility to my advantage and try to be buying it at 64 and under. Down here you can see I do own 50 shares of Cisco Corporation. It's my cost basis is $64.79, so I'd love to keep it back down in the $64 range. Beta of 1.13, like we said, a little more volatile than the overall market. Price to earnings ratio, not terrible, 18.49. I wouldn't mind this back a little bit lower, again towards that $62 range, but I'll take it at this range. Earnings per share, $3.55 per share. Their next earnings date excuse me, is January 29th to February 2nd there, if you're interested in that. For dividend is $2. They are quarterly payer. They do have a nice starting dividend yield of 3.05%. Ex-dividend date was October 5th. They paid it out October 27th, so you would be in line for the next dividend payout if you were to buy them now, and a 1-year target estimate, at least according to Yahoo Finance, of $83.67. Let's jump over and look at dividend yield theory. We'll look at the 5-year dividend average, 2.44. It's currently sitting at 3.05, and that speaks to some undervaluation on this one. Payout ratio low at 55.77%. I like to look at return on equity and return on invested capital like you saw in the vested interest stock screener before. I like 10% or better, and this is smoking high. Return on equity 101.2%, very nice. Return on invested capital 17.27%, so better than the 10% I'm looking for. Let's jump over, look at growing free cash flow. We want growing free cash flow because we want dividends to grow over time, and the dividends are paid out of free cash flow. 2020, 898 million. 2021 up to 1.4 billion, drop in 2022 down to 1.1 billion, and so far in 2023 it looks like it's going to be another jump up to 2 billion. So overall growing free cash flow. They're also repurchasing their own shares. As I said, I do have 50 shares. Currently, I'd like to build this out to at least 100 shares and then maybe back off, and I'm hoping that it stays in the $64, $65 range to do that. This is the first one on the list. Next up, Havy Furniture, ticker Havy Furniture Company's ticker HVT. This is out of the consumer discretionary sector. Another recent addition to the portfolio. Want to build this out to 100 shares as well. I do have 72 shares currently. My cost base is $27.28. Another one that is starting to run up a little bit. They all are a lot more green in the market the last couple of days. 52-week range as low as $24.79, as high as $38.85. So again, I'd love it to pull back closer to this $24.79. They estimate fair valued, it's well undervalued. Over 102% estimated return on this one. Now I don't know if I buy that, but that at least according to Yahoo Finance, that's what where they see it at. So they definitely see some a very good value in this one right now. They see a bullish pattern. Short term might pull back, midterm flat, and long term down. So again, I'd love it to pull back towards this $24.79. Why I'm trying to build this out. I'll probably build this out to about 140 to 150 shares and then back off of this one. Market cap of 471.488 million. So a small cap, very small cap company here. Beta of 1.38. You can see very volatile here. I'm trying to use that volatility to my advantage as well, trying to buy this down in that 27 or under range. PE ratio very low, $6.68, very low on this. Earnings per share, $4.31, very nice earnings per share. Earnings date is coming up. Well, it just passed us. October 30th to November 3rd. Sometime in here would have been either today. Might have even come out today. I'll have to take a look at that. Forward dividend is $1.20. Very nice dividend yield on this one, 4.17%. Ex-dividend date was August 25th. Looks like they paid in September, so you would be in line for the next dividend payout. And they see a 1-year target estimate of $42 on this one. So they see this one climbing back up over the 52-week high. Let's look at dividend yield theory on this one. We're going to take a look at their 5-year dividend yield average, 3.57%, compared to the 4.59 current. This one also is potentially undervalued, at least according to dividend yield theory, and it is significantly undervalued. Now, payout ratio very low on this one, only 26.45%. They have a lot of runway to increase their dividend. That's part of why I like this. Not only do they offer a very nice starting yield, they offer a very low payout ratio and can increase this one significantly over time. Return on invested capital and return on equity, ROE is sitting at 24.7%, beats the 10% I'm looking for. And return on invested capital, 16.1%, beats the 10% I'm looking for. Very nice numbers on this company overall. Really like this one. This is in my hometown of Michigan, or my home state of Michigan. Havy Furniture. It may not be in yours. I think they're more of a regional company, but it definitely a couple stores down the road from me. Let's look at free cash flow. 2019, I will say 46 million here, jumped up to 2021 to 119 million, down in 2021, though they did jump their repurchase of shares way up, 63 million, down again in 2022. So overall, 2020, 2021, 2022, they do have decreasing free cash flow at 22,600,000, but still repurchasing a big chunk of shares. I'd love to see where they're at for 2023, so I probably will look and see what they reported here at this earnings date. As I said, I do have 72 shares. I want to take a look at their earnings. I am going to build this out to probably 130, 140, probably 150 shares, and then back off of this one. Really like this company. Again, it's in my hometown of Michigan. Always try to support the home state whenever I can. Let's keep rolling. That's number 2, Havy Furniture, ticker HVT. Number 3, Realty Income. It's on the list again. That's right. I'm going to keep building this one out. It's really pulled back into the low 50s, high 40s. I love it when the high 40s. If I can get it 49, 48, I would love to keep doing that. I've been hitting, 5 shares, 10 shares here and there. It jumped up 4% today. We are talking about Realty Income, ticker O. This is the monthly paying REIT here. 52-week range as low as $45.04, as high as $68.85. Definitely closer to its 52-week low than its 52-week high. They estimate it is overvalued by about 25%. I don't know if I know that. They also bullish pattern, but they see it going down in the short term, down in the midterm, down in the long term. If rates stay high, that may be the case. REITs are really getting hit hard right now. Market cap of $35.461 billion. A beta of 0.87, so less volatile than the overall market. Price to earnings ratio 37.34. I know that's very high, but you really want to look at funds from operations for REITs. That tells you more than price to earnings does. EPS, earnings per share, sitting at $1.34 per share. Earnings date coming up November 6th. For dividend, $3.07. They do pay out monthly, so divide by 12 if you want to know what that is. They have a very nice dividend yield right now, 6.4%. Ex-dividend date was October 31st. They will pay out on November 15th. One-year target estimate, at least according to Yahoo Finance, $63.36. So they see it going back up into the 60s. Let's look at dividend yield theory. 5-year average 4.37, current 6.40. Very undervalued, at least according to dividend yield theory. Payout ratio, very, very elevated, 224.7%. In the 3 years that I've owned this, I don't think it's ever been under 100%. I'm just going to say that. So I'm not real worried about that. Return on invested capital, return on equity is lower than the 10% I look for. Return on equity sitting at 3%. Return on invested capital sitting at 2.5%. But it is pretty in line with their industry average. Some companies better, some companies actually worse. These type of companies are always reinvesting into new properties. So not a huge deal that this is below the 10% I like. Like I said, it is in line with its industry average. 2019 free cash flow, $1 billion. 2020 free cash flow, $1.1 billion. 2021, $1.3. 2022, $2.5. So far in 2023, $2.7. The definition of growing free cash flow. I would like it if they started repurchasing their shares again. I do own a Realty Income. I have 182 shares. Again, I'm just going to keep on adding to this. I'll probably run it well over 200 into 300, if not 400 shares. I like that it pays monthly. I really love the dividend yield on this one right now. So I'm going to keep adding to it. That is Realty Income, ticker O, REIT, out of the real estate sector. Last one. Number 4, Nutrien Ltd, Nutrient Solutions, ticker NTR. This is a Canadian company, so there are some tax implications. My brokerage takes the tax out whenever they pay the dividends. You need to check with your tax advisor to understand what taxes you will owe if your brokerage does not do that. Again, foreign company, this is a Canadian company here, so there are some tax implications around it. They closed up the day at $55.39. 52-week low is $52.23. 52-week high of $85.16, so right up against its 52-week low. They estimate fair value 10% undervalued currently. Bullish pattern, though they say short-term down, mid-term down, long-term. Again, this is more for traders. I don't really pay attention to it, but you might understand. Relative strength index means something to probably you day traders. I don't really pay attention to that stuff. Market cap of $27.391 billion. Beta is not listed. I should have looked that up. They are a little more volatile than the overall market. I know that. Very low PE on this one, 7.67, $7.67. Very nice earnings per share. The earnings per share is almost as much as the price to earnings, right? $7.22. Earnings date was November 2nd. They have a forward dividend of $2.12. They're a quarterly payer, so divide by 4. Nice dividend yield on this one as well, 3.91% starting dividend yield. September 28th was the ex-dividend date. They paid out on October 13th, so you would be in line for the next dividend payout on this one. And a one-year target estimate of $76.03, so they see quite a bit of upside in the next year, at least according to Yahoo Finance. So let's take a look at dividend yield theory. Current dividend yield 3.91. Their 5-year dividend yield average 3.27. So another one that is potentially undervalued, at least according to dividend yield theory, and another one with a very low payout ratio, 27.98%. Very, very low on this one. Return on equity and return on invested capital. Return on equity sitting at 8.7%. I like 10% or better. It's pretty close. It's not quite there, but another one that if you were to compare this to like Mosaic, it's not far off from its industry average. Return on invested capital under the 10% I like at 6.08, but again, not far off its industrial average, so not concerned with that. there. Let's look at free cash flow. We want growing free cash flow over time because we want our dividends to grow, and dividends are paid out of free cash flow. 2019, 1.7 billion. 2020, 1.7 billion. Flat, really flat. Although in 2019 they bought back a lot more shares than in 2020. 2021, big jump up to 2.1 billion. They're still buying back shares. Actually bought back a bunch more shares. And 2022 up to 5.6 billion and bought a bunch more shares back. 2023 so far it looks like 4.1 billion. So it looks like they'll have a year close to 2022 as well as repurchases, and they are consistently buying back their shares, which I really like. So not only do they have growing free cash flow, but they have growing, looks like, not every year, but growing their or increasing their repurchase of their own shares. Now, another one that I own, NTR, is in my portfolio. I have 116.88 shares. My cost basis is $59.82. So I want to decrease this cost basis here. I want to build this one out to probably 130 to 150 shares as well. That's the last one on my list, though it is not the last one that I will be adding to for the month. There are a lot more that are pulled back under my cost basis right now. I will look at some of the higher yielders in my cost basis, and General Mills is not in my portfolio, but it is one that I'm really watching and very close to pulling the trigger on adding this one here. Pfizer I'd like to add to this month. Verizon as well. CVS, Enbridge, these are some high yielders right here. Procter & Gamble, I really want this one to pull back a bit more, so I'm wishful thinking on this one. Bank of America is under my cost basis. I want to add there, and Kraft Heinz. All these, plus some others. Sabani Stillwater, Medical Properties Trust. There's several others in my portfolio that are below my cost basis that I would add to if I have a little bit of extra funds. You know, I'm not talking about adding a lot here, but 6 to 8 shares over the next month to each one of these positions. I wouldn't mind that at all. Maybe some more to some of the higher yielders like Enbridge, Pfizer, and Verizon. And if I add General Mills, I'll probably do that in tranches of 10. So that is really it for this one. Yep. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share videos like this with you every month, as well as my tune in Saturday. This will come out Friday. I'm recording this on Thursday night. Saturday, I will do the dividends that were paid out, dividends and options that I ran in the month of October. And then I will do my Sunday morning updates. Every Sunday, you'll see those full disclosure on my portfolio, what I'm buying, whether I'm up, whether I'm down, any dividends I've received for the week, any options I've been in. That's a weekly video. So again, if you are interested in this type of content, if you are a dividend growth investor, hit that subscribe button, hit the notification bell, drop a comment down below. What are you buying for the month of November? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop that down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Just never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.